say, yes, I'm bullish on gold, but to talk about 5,000 gold or $10,000 gold, I think that's foolish. You shouldn't. Not foolish anymore. There's legitimate possibilities for those type of numbers to be reached, certainly within a matter of a couple of years, because of all the things and other things that we didn't discuss in this thing. So I'm also think that the upside could be greater now than any other time in my career. Well, I think the single biggest gain for gold has come because a bunch of nations are recognizing that the unification of many of them, known as the BRICS, is a legitimacy. It's going to be shown to be more than just that, I think, when they have their fall meetings.
Gold investors who entered the market at the end of 2023 or early 2024 have seen substantial price growth this year. The precious metal was priced at $2,063.73 on January 1st and has since shattered multiple records. In 2024, gold has surged by nearly 18%, providing solid gains for those who invested early. It reached an all-time high of $2,483 before experiencing a decline. However, J.P. Morgan predicts that gold prices could regain their momentum in Q4 of 2024. The investment bank forecasts that gold could surge to a new all-time high of $2,500, offering a potential return on investment of approximately 3.7% in the coming months. Peter Grandich and company recently shared his latest insights on the key factors influencing gold's price and its future trajectory in 2024 and beyond. In an interview, he reflected on how his perspective has changed, stating that he used to dismiss the idea of $5,000 or $10,000 in gold as foolish, but now considers such numbers as legitimate possibilities within a few years due to a combination of factors. Grandich also highlighted the impact of the BRICS nations, suggesting that their unification will have a transformative effect on global trade, comparable to the Industrial Revolution. Recent times have seen a notable shift in financial preferences, with a growing emphasis on gold. Asians, in particular, continue to purchase gold despite its rising price, marking a significant departure from past practices. This gold rush is transforming the global financial landscape. Despite the surging price of gold, both individuals and nations are increasing their purchases. According to the World Gold Council's Q1 2024 Gold Demand Report, global gold demand has risen by 3% overall. Grandich pointed out that while the Bank for International Settlements now considers gold a Tier 1 asset alongside stocks and bonds, many investment portfolios still lack significant gold exposure. This, combined with the fact that gold isn't yet a mainstream topic among the general public, reinforces his bullish outlook on the metal's future. Before we jump into more content, consider subscribing and enabling notifications to stay updated with our latest uploads.
2536 was the actual number, and gold was under 2,000 at that time, but that's a number that started when it was around 1,300. And boy, didn't really believe. Sometimes I used to think, Pete, you really think it's going to get to 2536? But by and large, I certainly think before the BRICS even take place, we'll be there. There's too many things that are happening now not to want to drive it. And the last probably piece that's going to be its extra boost is we're seeing some of the things that were highly pushed up earlier, things like Bitcoin, the general stock market, more narrow, the Magnificent Seven and all. We're starting to see some of that excess come out. We're starting to see some of the air out of those bubbles coming out, and it's flowing into the gold, and it will flow into silver as well. So right now, everything's systems look all good. And again, like I said, is no matter where you turn, the only time you're going to hear gold spoken about is in the few little people and that make up the small little part of that sector. It's still not spoken in the general media. It's still treated like kryptonite by the financial service industry, and that's why I still think it still has quite a ways to go. And through the price, so when we get through the price, so I was always the guy that stood at a show and say, yes, I'm bullish on gold, but to talk about 5,000 gold or $10,000 gold, not foolish anymore. There's legitimate possibilities for those type of numbers to be reached, certainly within a matter of a couple of years, because of all the things and other things that we didn't discuss in this thing. So I'm also think that the upside could be greater now than any other time in my career. Well, I think the single biggest gain for gold has come because a bunch of nations are recognizing that the unification of many of them, known as the BRICS is a legitimacy. It's going to be shown to be more than just that, I think, when they have their fall meetings. And I think, of course, that huge acquisition by central banks, a variety of them, of physical gold, and something which isn't spoken about much at all, that so many of these countries have also repatriated their gold out of the United States back to their own banks, was clearly a setup to be prepared for a change on the world scene. Now, I view it, and I've said for well over a year, that when the BRIC nations are all said and done 3 to 5 years from now, we will look at it and see that their impetus on world trade was similar to what the Industrial Revolution did for world trade. And the problem with this is the United States and unfortunately Canada are going to be basically outside looking in. And at a time when both of them are suffering in similar grounds, politically, socially, and economically. So the BRICS was the first thing. As you and I speak, you're right. The Middle East is getting worse, not better, and other areas. And so all of that, I think, has been a real positive to gold. And what's amazing, Charlotte, and it doesn't matter where we are in Canada or the U.S., even though Canada used to be far more attractive to physical bullion, not as much anymore. The central bank's banker is the Bank of International Settlements. That's who really is the representative of what central banks are doing. And they, a few years back, made gold a tier 1 investment, joining only stocks and bonds. So to them, the world's central bank views stocks, bonds, and gold on an equal footing. Yet most portfolios have little or no gold still, even at this point in time. I think that's another reason why I maintain such a bullish stance, because no one's telling me about some great gold stock or white gold. I mean, I hear that about Bitcoin and other cryptocurrencies. So I think gold still has quite a ways to go. And all these things that have happened since you and I have spoken have really underpinned it and helped it accelerate to where it's gotten.
People are getting impatient with the Federal Reserve. For the past year, the Fed has kept interest rates at their highest level in more than 2 decades, making it more expensive to get a mortgage, borrow money, and pay off debt. Now, the central bank is mulling over when to do something it hasn't done since the darkest days of the pandemic: cut interest rates. The Federal Reserve is gearing up to cut interest rates as soon as next month, which could bring relief to people with mortgages, credit cards, and car loans. But it could be a bumpy ride until then. Peter Grandich believes that the influence of the Federal Reserve on gold is waning, arguing that its role is now far less significant than it was decades ago. He cautioned that a simple cut in interest rates wouldn't magically solve everything. Addressing the gold market, Grandich explained that longtime gold investors used to argue that gold was manipulated through a 2-tier market, one controlled by paper markets in London and New York, and another in the physical market. However, he believes this dynamic has changed. Let's now turn our attention to the video again.
Just like people say umpires don't bet, you find out that umpires do bet. So I think if they were leaning anyway, they'd be leaning to Harris versus Trump. Certainly Powell. I don't think he's a fan at all of Trump. Would he make a cut just because it might get her over the line? I don't know to that point. What I do think that the mistake is that, which we discussed at the onset, and that is a simple cut in interest rates now just sends everything back honky-dory and we're all great anymore. You'd be surprised that if we ever have to cut interest rates a lot, the damage that will do to the dollar. But more importantly, that is that it will reignite inflation that's always been a lot worse than we're reporting. I'll just say this, and I'll say this till I'm blue in the face, Charlotte. Anybody who wants to tell me that goes shopping, pays rent, buys clothes, whatever the regular stuff, and tells me that inflation's only going up 0.2 or 0.3%. Everybody client that we have that's in businesses that own restaurants tell us it's literally doubled the cost or sometimes tripled the cost of food in 5 years or less. So I believe inflation is a lot higher than what we're told. And the problem that compounds that is wage power, the ability to get higher wages has been lost. The unions don't have that leverage anymore. We don't have that leverage. We're creating machines and ways, things that are going to replace a lot of people. So you're not going to have that leverage of your labor that you can bring from your back and all. So while there may be a lessening of interest rates over a period of time, I don't think we're going to see 1 or 2% interest rates again and, inflation at 0 or something like that. I don't think they have that effect. So let me, this is an important thing. So we those of us who've been around the gold for decades would have argued, and I was one of them 10 or 20 years ago, that gold was manipulated, that there was a two-tier market. There was the paper market, which was basically controlled out of London and New York. And then there was the physical market. And it always seemed that when the physical market was saying people really want to own gold, suddenly the paper market was hit and it went down and it stayed down. That's gone. The basic movement of gold and the trading of gold has moved to Asia. London and New York are second and third tier players now. And therefore, even when we do have suddenly the old 10 or 11 a.m. sell-off in the COMEX, or some of us like to call it the CRIMEX, it doesn't last for days and weeks anymore. Sometimes it just lasts for hours. And that's because so much more of the demand and physical market now has overtaken the paper market. Where that hasn't flipped yet is in the silver market. The silver market is still being influenced more by paper. And that's because I think there's a much bigger short position in it. But the bottom line is the Fed, and what the Fed does is probably 8th or 9th on the list now of the 10 most concerns you should have as a gold buyer, when probably 20 or 30 years ago was 1, 2, or 3. So I don't think they play anywhere as an important role anymore. I'd be more concerned about what an Asia country or banks or what BRICS are talking about than anything the Federal Reserve is talking about now. They're a paper tiger now at best.
The direction of travel is still higher over the coming quarters, forecasting an average price of $2,500 in the fourth quarter of 2024, wrote J.P. Morgan's Gregory Shearer, the head of base and precious metals strategy. Gold has intrinsic value and has historically served as a buffer against inflation, in contrast to fiat currencies. Gold became more and more in demand as people and institutions looked to safeguard their wealth as inflation rates shot through the roof in many economies. Do you think $5,000 in gold is realistic? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.